This is Access Ann Arbor.
Welcome to a special feature on Leave a Legacy. Leave a Legacy is a program designed to help individuals in Washtenaw County and throughout the state to learn how they can benefit their own charity through a planned gift. Many of us already know how to give to our own favorite charity on an annual basis, although we're going to be talking about that today. A planned gift is a way of providing something extra to those charities at our death in a will or estate plan. My name is Dennis Mitzel. I'm an estate planner and a volunteer for Leave a Legacy. I also have two special guests here with me today. I have Christopher Belcher, a certified financial planner with the Raymond Group in Ann Arbor, and Susan Rink, the Director of Legacy Giving for Eastern Michigan University. They are also volunteers for Leave a Legacy, and they're going to help me talk about charitable giving. Chris Kelly was also going to join us here today from PNC Bank. Chris developed laryngitis and couldn't be here. So Chris, we want you to get well. We miss you. So with that, what I'd like to do is I'd like to start out talking a little bit about lifetime giving. And Susan, in the state of Michigan, how many people every year are giving to charity?
Based on a study that the Leave a Legacy program commissioned just recently, and a study that they renew every 10 years, we found that residents in the state of Michigan are giving at 80%. So 80% of our residents are giving to charities on an annual basis, which is a phenomenal figure.
That really is an incredible number. And why do people give?
You know, I'll go. Lots of different reasons for folks giving as we look to our charities that are near and dear to us, our religious organizations, the universities that we have degrees from. People connect to the mission. People believe in the causes and the work that the charities are doing within the community. And I feel that it's a way for us to boost the communities that we all live in to be better places.
Yep, it's really people support organizations that help the quality of life, whether the quality of life is their healthcare quality, their educational quality, and organizations that spread that quality to the rest of their community. And that's very important to many people.
Those are great. I know there's 100 reasons, but one thing that you didn't mention is a tax deduction.
True.
Are there people who give just for the tax deduction?
In my over 20 years of fundraising for universities and healthcare organizations, I haven't had an individual ask me specifically to give for those reasons. It doesn't mean that they don't consider them, and all of us usually are making gifts at the end of the year, so it's something that comes to mind, but it's not the single motivator for anyone that I've worked with.
I work for a CPA firm, and I find that most people who take charitable deductions, they have a philanthropic intent. They have other reasons that are important to them. I think if you look nationally, the fact that most people who file tax returns don't file a 1040, they file a 1040 EZ where they can't take a charitable deduction, yet they are part of that 80% that is still giving to their nonprofits.
And I agree with that. And I tell people who are interested in a tax deduction that that's great, but I want to make sure they really want to give. That's the most important thing. On the other hand, Chris, when someone comes to you and he tells you they're going to make a charitable gift, now you can help them.
I can talk to them about some of the benefits that will accrue to them in doing so and how they can structure it to make it work much better than they otherwise would have.
Absolutely, and you know, as in my work with donors to the university, should they be interested in that tax benefit, it opens up a broader discussion as far as what gifts we would consider. You know, what assets they're holding. Do they have appreciated stock? Do they have a residence that they may not be using, a piece of land? Items where, unbeknownst to them or through a little bit of a discussion and maybe even work with our financial planners and attorneys, we can put a gift together that supports the university and really benefits the donor.
Okay, now I'm going to take a step backward. What's the most common charitable gift that you see, and Chris, or that you see?
I would just say that organizationally across the board, it would just be a gift of cash or a check. You know, it's through annual giving solicitations, which are the majority of what those 80% of those gifts are coming in. You know, the direct mail appeal that we get in the mail, maybe a phone call from a student volunteer or a volunteer to a healthcare organization asking for money over the phone to support the cause. But as we look to technology and the changing of ways, we see a lot more web gifts. We even are seeing gifts via text. You know, so the trends in giving are changing, you know, as technology changes, but I would definitely say that that gift of a check, you know, and then it just gets put in the mail.
Very good.
That's a reason for us to still have stamps.
Yeah. And Chris, what documentation do you need if you want to take a charitable deduction for that check?
You should get a written acknowledgement from the charity, and what form that takes and how complex that acknowledgement is depends on the size of the contribution. But for most of us, we want to have some type of written acknowledgement from the organization saying that this was a contribution and that there were no benefits received by you personally for making this contribution, apart from the emotional and spiritual benefits we all receive in supporting the charities that are important to us.
Absolutely. And those are always followed up with lots of acknowledgement notes from the dedicated staff that loves those gifts at any of the charities, for sure.
Now, if I make a gift of $500, write a check, and don't get an acknowledgement, and I get audited, this is for Chris.
I knew that was for you.
Will I get that deduction?
The IRS rules say $500 or more, you have to have that written acknowledgement.
Okay.
So that'll be between you and your auditor at that point in time. You cannot go back and retroactively get that acknowledgement, which is that is in the regs.
So the point is, the acknowledgement is not just proof; it is an actual requirement, and so you've got to get good documentation if you want to itemize.
That is correct.
Absolutely.
And that has changed over the years. It never used to be as tight
Yes.
when I started in the business many, many years ago.
Chris, when we talk about planned giving, we're often talking about post-death, but we also have some special provisions we do during life. I'd like you to tell us about some of those provisions that you sometimes can help your clients take better advantage of a charitable gift.
Well, let's go back to the tax benefits that, you know, that is really a benefit for many people who are making charitable contributions that you should be taking advantage of. For example, taking advantage of capital gains on appreciated securities. She mentioned houses or stocks. If I bought 100 shares of Apple in 2000, I paid $1.50 per share.
You might not
If
be here
I
with us.
sold that today for over $100, I'd have a fairly large capital gain, depending on my income, and I'd be paying either 15 or 25% tax on that. And one of the reasons I would sell it would be to turn around and give it to Eastern Michigan University or one of the charities that I support. I'd be much smarter to just give that stock to Eastern Michigan University, and it's a full $10,000 gift rather than a $9,500 gift.
Exactly.
That after I paid the capital gains tax. So it does make sense.
So if I wanted to give a $5,000 gift to the community foundation, and I used stock that had I sold it, I would have recognized a big gain. But I give them the stock, I get the same deduction,
You get the same, the market value deduction for that
but don't
stock,
have to report the
but
gain.
you don't have to report the gain.
That's a pretty good deal.
That's a
Yes.
pretty good deal. There's, we've also had another recent.
Well, I'm going to go back to that
Yeah,
one for just
okay.
a second. If anyone was going to make a substantial gift, I'm going to say $5,000 or more, and they had appreciated stock, is there any reason they shouldn't be using that stock to make the gift?
I guess it would depend specifically on the stock and the circumstance, but what I said earlier about understanding the asset structure that your donor, or in your case your client, has, and understanding what they hope to do with it, there's a significant benefit to directly providing stock to a charity because you bypass that capital gain. So depending on the donor's motivations, it's a very good asset for them to give if they're considering selling it.
Yeah, and very underutilized.
Yes.
That's correct.
Anything
Absolutely.
else, Chris?
There's also, we've just had passed the, or made permanent the charitable IRA rollover
Yay.
opportunity. For those who are over 70 and a half and receiving required minimum distributions from their IRAs, if you wanted to make a charitable contribution, you would have to take the IRA distribution, pay tax on it, so it's part of your taxable income, then turn around and make the contribution and take it as a charitable deduction below the line. With this new rule, if you're receiving required minimum distributions, you can contribute that money directly to the charity, have it go directly from your IRA to the charity, and it's never added to your taxable income. So it comes off the top, it reduces your taxable income, and this is, many of our clients who are over 70 are making charitable contributions already. Why make contributions with money after you've paid taxes on it and just get a reduced deduction when you can use this direct charitable rollover with your RMD money? And not only does it reduce your taxable income, it may affect the taxation of your Social Security. It reduces your income, so your Social Security may not be taxed as high. It's a wonderful way to approach your charitable. Once again, this is taxation is a benefit of making a charitable contribution. 80% of us are making these contributions. We can be tax smart about it as well and receive the extra benefits for doing so.
And you mentioned this was a change in the law, that this had bounced around for a long time and people were not comfortable using this technique, but it's now permanent.
For the past number of years, Congress has passed it in December of each year.
Yes.
At which time most people had already taken their required minimum distributions and they couldn't even take advantage of it, or some tried to guess whether they would pass it or not.
I've had those
now
times.
it has been made permanent, as much as anything Congress does is permanent.
Exactly.
But we can plan on it now from the beginning of the year, and it certainly benefits the nonprofits.
It absolutely benefits the nonprofits. As you mentioned, they have renewed this many times, but it's always been in December, and it didn't allow for the nonprofits to get ahead of it and to share that message and that opportunity to those constituents that would have been able to structure a gift that way. From our experience at the university, it's been an outstanding gift vehicle to really maximize and leverage larger gifts from a lot of our constituencies, our emeritus faculty, some of our retired alumni and friends that have wanted to make larger commitments and didn't feel that they had the cash flow to potentially do that, but with the rollover from their IRA, they were really able to do some really great things to benefit the university. So we're really pleased that it's back.
100,000 is the maximum you can do, but most of the people I see doing it are doing smaller amounts.
Yep.
And really it's leveraging the gift.
Yes.
It makes it a larger gift than otherwise they would be able to give.
And if I don't itemize, this will really, really help me then,
That is correct.
because it's right out of my income whether I itemize or not.
That's correct.
That's really great. Susan,
Yes.
Eastern Michigan and many charities have other techniques for helping people not only help their charity but also increase their income.
Absolutely.
Can you tell us about that?
I sure can. The most popular form is called a charitable gift annuity, which provides a donor life income for their life. So the simplest way that I try and tell our alumni or friends about a gift annuity is that it's a contract between the charity and a donor, and the donor will provide the university, in my case, with a gift, typically between a $5,000 and above amount. And what we do is we invest that, and then based on the individual's age, they receive an annuity payment for the rest of their life. And it can be up to one life or two. So it can be a husband and wife, which is often a very nice way to provide secure income. The income that they receive is guaranteed by that charity. And one thing that is different from commercial annuities, which we are aware of in the profit sector, is that the gift annuity rates that are set by the American Council on Gift Annuities, so there's no need to shop around. You know, the rate that Eastern provides is the same rate that the American Red Cross provides. It's the same rate that the Community Foundation provides. So it's a very great way to make a mission-driven gift to the charity that you love and then receive income for your life. The remainder then will go to the charity.
Okay, I'm going to bring that down a level. If I have a client who's 80 years old and wants to invest $10,000 in this gift annuity, it is a gift annuity, how much will that 80-year-old receive every year for the rest of their life?
The rate for an 80-year-old is 6.9%, so they would receive $690 annually. Typically, their quarterly payments is what we do, and that's typical across the board, but they could be monthly, they could be annual. They also can be directly deposited into the donor's bank account, so there's no checks, there's no things in the mail. If the donor happens to summer in Michigan and winter in Florida, directly into their bank account. It's a very convenient way for individuals to make a gift. And you mentioned an 80-year-old. The rates go up as you age. So if you're 90 plus, that payout rate is 9%. So it's a great vehicle. It's a rate higher than what we're earning and a lot of other things. And one of the really great pieces is that the guarantee by the charity assets is a wonderful gift, and it provides a sense of security to the donors that they really feel that their investment is protected.
And it's also a nice way you can leverage that by using that Apple stock that I had.
Absolutely,
and
you
donate
can.
the Apple stock. So not only do you make a gift, but you make a gift and eliminate the capital gains, although you'll see some of that maybe coming back to you as the stock is sold. But it is a wonderful way to leverage that gift.
Right. They're made with cash or appreciated stock, so we just run the illustrations a little bit differently. And that's not a gift that you need to work, no disrespect to the attorneys out there, but it's typically not a gift that we need to work with an attorney on. So it's a very simple, usually 2-page contract with the donor.
So they can get 6.8% through a gift annuity or 1 or 2% in a CD, but it's really not that. It really is still a gift. And why is it still really a gift?
The reason that it's still a gift, at the time that they make the gift, this $10,000 in your example, they won't receive a charitable deduction for that whole amount because through their lifetime they're receiving the annuity payment. So the calculation that is done by charities at the time of the gift provides the donor with a partial gift, and it's determined by the amount that they will receive and then the amount that we anticipate the charity will receive at the time of their death based on the actuarial lifespan.
So the charity will end up getting about 50% of the value eventually.
Typically, that's what we anticipate.
But it's also a great underutilized program that
It
people
is.
can help themselves and help charity. We're talking about Leave a Legacy and how people can help their own personal charity at death. I've got Chris Belcher with me and Susan Rink, and I now want to switch to a discussion regarding gifts at death, which is really our purpose. And either of you, how many people in the state of Michigan, we know that it's over 80% during life, how many people give something at their death?
In the latest study that the Planned Giving Roundtable commissioned with Michigan State, it's 9%. And actually that number has gone up. Nationally, the number is 3% leave something at their death to their favorite charities, as opposed to Michigan, it's 9%. We're very philanthropically proud of our state. However, 9% is still a fairly small number. Thinking in terms of all these charitable organizations that depend on the support of our individual gifts for whom we are giving money annually, they lose us all of a sudden when we die. And it's an abrupt loss in most cases.
Absolutely.
We're no longer there supporting them. If they were important enough during our lifetime to be supporting, we really should be considering the importance of this organization, both to our family and to our communities.
And so if we have 9% giving at death and over 80 during life, what could happen, not to just one charity, to all charities in the state of Michigan if we could get that number up to 30, 40, 50%?
It would be, I don't want to talk myself out of a job or out of a career, but if we were able to move that needle through our educational policies, through breaking down the barriers to folks thinking that this gift is a possibility for them. The work that the Leave a Legacy program does is really instrumental in this. I think that it would be transformational for charities and educational institutions that could support our communities, support our children and our causes that are near and dear to us. So I think that's what we're all striving for, and why we're here tonight, to try and inform and educate that these are gifts that all of our individuals can do with a little bit of planning and a little bit of know-how, maybe some help from planners and attorneys. We can get it done.
I think a lot of people don't do it because they think it's only for the wealthy.
Absolutely.
And it really is not.
No.
I mean, we've talked about a couple tools,
Yep.
but we'll talk about a couple more, but it's a very simple thing to do, and it's not something that can make tax sense for you and for your beneficiaries.
Yeah.
And in many cases, they don't do it because they've never been asked.
Right.
So we're going
Right.
to talk about that a
And
little
that's
bit.
exactly the issue. We know people want to take care of their charity. We know they do it during life, but it's not happening at death. And you've just mentioned a couple things. That's really the question, why? Why isn't it happening at death?
I think one of the barriers that is very important in my work and in the work of all of us is articulating to the donors that they can still provide for their loved ones, and that the gift to the charity can be one that is added after their family is provided for. We spoke briefly about the IRA accounts. The IRA has been set up to not be a vehicle that actually is helpful to pass to your heirs. It's taxed horribly. Now, that's something that I speak to my emeritus faculty about, to inform them and educate them, so that we can say, if you're charitably inclined, you might want to consider a gift from there, and then pass on an appreciated asset or another one of your assets that's less detrimental to your students or your family members that way. So it's a lot of dialogue and understanding where the donors are hoping to do, and understanding what they hope to do in order to make a connection and continue to help the charity.
I'm going to ask the question that I asked on lifetime gifting, which we said was primarily a check. What's the most common way someone gives at their death?
Absolutely. In my experience, and then nationally across the board, it's a gift through a will, a gift through a designation to a trust. Those are the most common kinds. They're very simple to do. What is very beneficial to the donor is that they can provide as much detail as they want as to where that gift goes, and then the charity will honor that. So I have donors that may broadly give to Eastern Michigan in their will, but then I have individuals that will specifically speak to a specific scholarship fund or a program that they graduated from. The same can be said for other charities, where it can just go to the general fund of those charities to support their broad initiatives, or specifically to an initiative that was near and dear to them.
But you got to have a will.
You have to get the
have a will.
Yeah. If you don't have a will, does the state of Michigan allow any of your assets to go, if you have family members, to go to charity?
No. The laws of intestacy in the state of Michigan have, they're step by step by step, and they go to spouse and kids and portion to spouse and maybe to your parents, and but there is no charitable designation in the laws of intestacy.
So the first thing is to get a will.
That's correct.
That's the general advice.
Yes.
And are there obstacles? I know there's a lot of people, surprisingly, who don't have wills. Do you know any of those obstacles?
Well, it costs a lot of money. You have to go see one of those attorneys. But it really doesn't. And there is a statutory will in the state of Michigan. You can go to the Michigan Gov website and download a statutory will. It has directions in it. It's very simple, and it's for a simple estate, but it does permit you to leave up to 2 charitable beneficiaries in that statutory will.
That's great.
We don't recommend it for all cases. We like to see you going to an attorney or your financial planner or an insurance agent, somebody who can help you. You can come to call Leave a Legacy, and we can make some recommendations for you as well.
Right, and often depending on what charity you're giving to annually, they may have some recommendations as well. You know, a list of estate planning attorneys that would be helpful. I
As
think
can
that-
the State Bar of Michigan.
Exactly, State Bar of Michigan. There's a lot of resources out there, so hopefully the stigma of doing that, because the only real way to make sure that your intentions at death for your family, and if you're charitably inclined to leave that bequest, are to put it in documentation in a will. So it's incredibly important.
Okay. Now, we'd like people to do a will even if they're not charitably motivated to take care of their family.
Yes.
But there are other techniques other than using a will that they can still designate some funds to charity.
Well, particularly in this area, in the Ann Arbor area, we see lots of people with much of their assets in retirement plans, in insurance, in transfer on death or payable on death accounts at banks or brokerage firms. And all of these assets that have beneficiary designations, you can designate a portion of that asset to a charity. Susan mentioned IRA beneficiary designations. When I leave my IRA, my tax-deferred money to my kids, and I leave after-tax money to the charity, my kids have to pay tax on that. If I
don't
leave
have to
it
pay.
directly to the charity
We don't have to pay tax on
and
that.
give my kids the money I've already paid tax on, I can actually leverage the amount of that
Exactly.
gift and the value of that gift to the
Exactly.
charity.
You maximize the level of your estate to really leave the most impact for your family and for the charities that you love.
And who do I talk to if I want to change my IRA beneficiary designation? Who do I talk to?
The IRA custodian.
Exactly.
Whoever that might be.
Exactly.
If you're working with a financial planner or an advisor, you can go directly to them. If you're working with a mutual fund company, you can call them, or they do it on their website.
Absolutely. A lot of these, one of the donors I worked with recently was hoping to change his beneficiary designations. He had 9 or 10 different accounts, and I was able to find all of those forms that he needed online. So it is not a cumbersome process to do that by any means, and you just change the beneficiary designation to a percentage typically that would go to, you can still have it be a family member, and then, a portion to charity. And then typically what we suggest individuals do when they do that designation from a custodian is provide a letter of intent, if they're willing, to us, so that in our files we can know where that donor's money wants to go. Because typically when we receive those checks at death from the IRA designation or a different designation, you don't know if they wanted to support biology or chemistry or the marching band, for example, for a university. So that's really helpful.
Okay. And I know we're running short on time. I know we can do the same thing with life insurance.
That's correct.
And you can talk to your own life insurance agent. But I now want to just let people know that if you either are an organization that would like to hear Chris or Susan or another volunteer speaker from Leave a Legacy talk about charitable giving, you may contact Leave a Legacy. If you're an individual who wants to know more about how you can provide for your own charity, either through lifetime or testamentary gifts, or if you're a nonprofit organization and you want to learn more about these charitable techniques, I'd like you to contact the Leave a Legacy website, which is leavealegacy, southeastmichigan.org, and our phone number is 888-826-7900. We're hoping that we can help you help your own charity and help all charities in the state of Michigan.